Hello, everyone. Happy Thursday. Unemployment Thursday, jobless claims Thursday, non-farm payrolls Thursday instead of Friday because tomorrow is a holiday. I will not be here tomorrow. Markets will be closed in the good old USA, so I hope everyone in the US has a happy July 4th. Good morning, John. Good morning, Patrick. Good morning, Kevin. Good morning, Jake. Good morning, David. Good morning, Anissa. Good morning, Sterling. Good morning, Royal Palms. No problem, Sterling. Thank you for tuning in, everyone. We'll wait for some more people to come in. We had the non-farm payrolls date out today, again, because tomorrow is a holiday. Coming in, beating consensus and at 147, drastically different than the ADP data, which was negative for job loss. Unemployment rate dropped. Now, part of this, the stronger non-farm payrolls was made up, about half of it was from government hiring. It still does count, though. I mean, you may not, if you want to shrink the government, you may say, well, that's not a good thing, but it still counts towards people having jobs. So, putting a little, there's no way there'll be a cut in July now. If you look here, if you look at the Fed Watch tool, it's back to 93% for a pause in July. Still a cut in September, and we had 3 priced in yesterday. Now there's just back to 2 cuts, September and December. So that's where we sit there. What else? We had jobless claims drop from prior and consensus. Continuing jobless claims still staying elevated, but right at the same as prior. A little higher than consensus. You see 73K were the government payrolls there. What else we have? We have hourly earnings coming in not as high. Expected 3.9, coming in 3.7 year over year and 0.2% month over month. So earnings not as strong, but the jobs numbers are stronger, and the last couple months were revised higher. Hello, Daniel. Hello, Charles. So that's where we sit right there. What else do we have coming out today? We have the S&P. This is 15 minutes after the cash opened. S&P Global Composite PMI and Services PMI still expected to be in expansion, although possibly down a little bit from the prior number. Then we have the more important ISM services at 10 a.m. Eastern. So 30 minutes after the cash open, and we're going to keep an eye. New orders were in contraction, and prices paid were still pretty elevated. So we're going to be keeping an eye in there, and also the employment was just holding above contraction levels. So do not ignore the 10 a.m. print, and then it pretty much gets quiet. We got Bostic speaking, and we got the bill auctions, and that's it. And then remember, nothing tomorrow. Going into the open. Pretty decent morning. You got Palantir up nearly 1.8%. Chips are all strong. We have Cadence Design Systems. I don't know. I don't really look at that, but up close to 5%. What else do we have? We have Meta. We have all the mega caps except for Apple rallying, but Apple's only down 13 basis points. So pretty decent morning going into the open. We have everything except basic materials. Positive. Gold started to sell off, and silver started to pull back after that non-farm payroll report. So we'll keep an eye on that into the open. Other than that, everything is positive besides basic materials. We already looked at the Fed Watch. Fear and greed. We're almost on the verge of extreme greed again. Almost back to extreme greed territory. Or based off that metric, we really start looking for the topping pattern. Schiller PE back to 38. 38, you got to buy it all. Market just continuing to grind higher. Right now, still around 6,300 is the next minor target. And then if it keeps grinding above there without triggering a major reversal pattern, although it's still, we have cycles now at the top on the daily again. Incredibly overbought. You just see this climbing up. If we look at volume, again, we yesterday was dropping off a bit. Now today we'll see how it is. We might get a little more coming in, but this afternoon it'll probably start drying up. But you see, when we get to selling days, you're still volume comes in on the selling days, and then it's just grinding higher on the up days. So we'll probably get something to shock it. We'll get something to shock it. How do I collapse that again? All right. So There we go. There we go. So today, again, don't do anything silly. You see the big up bar. Before this, it's still technically a wedge, or it's a reset wedge on the 4 hour, but we have not broken, and we haven't even broken below the rotation zone, let alone close below it. So the only thing, again, it's continuing from my perspective to trail any short-term longs, to continue to trail it. The first thing I'm watching is when you do reverse sometime next week and close below the rotation zone. That's really about it. Hey, Rick, good morning. Hey, good morning, Harold. So, good morning, Dean. Good morning, Tony. All right, so that's what keeping on. If we continue to rally, it's 6303 is the harmonic. I'm just looking at the 6300 area. Right now, we're trading 6291. Again, on any pullback, your minor support today is 6281, if it can even pull back that far. And that's also where, if you zoom in here, that's where the bottom of the 4-hour rotation zone is coming in. It's going to keep rising up that area. So 6280, 6281 is key support on any pullback. All right, but there will be pullback opportunities. It's just not yet. This market just keeps grinding higher, invalidating the little 4-hour. The target's still the same, though, interesting enough. Now for the S&P, on the NASDAQ, we start taking out these highs, it will be invalidated on the NASDAQ. And we did get the close below this. This was not a double bottom because of the targets. Because of the targets here exceeded this level with the second and third target, but it was a really nice breakout setup yesterday. So again, if we're looking at the minor levels, if this thing keeps grinding higher, this is a great area to use your reverse harmonics for the little short-term levels today. So you got 22,979 and 23,023. So those are the key minor levels for today. All right, Dow not really reacting that much. The Dow's had the major run back on Tuesday. I'm just watching if it does pull back a little, 44,700 on the Dow. Russell, yesterday we got to the next cluster. The next cluster spiking up earlier, almost to 75% harmonic. So Russell continues to climb. If you're trading the inverse head and shoulders, I'm using intermediate targets. My next one was, we almost got there to 75% harmonic. I covered these yesterday on the trade year thing, then 23.37 and then 23.81. The pullback now, your major support is at 21.88. Especially with the flat 200. The VIX continuing to drop, almost trying to break down to new recent lows. What was the low here? 1623, when we're trading 1626 with a low of 1621. So it actually made new lows. It actually made new lows today. No fear in this market, just slowly grinding higher. DAX, a little bounce there. Not much going on in the DAX. So in terms of setups, the yields, look at the yields. Yields actually closed above this 4.27 yesterday and into the rotation zone, and then spiking nearly to the prior breakdown level of 4.35. So yields really spiking on this stronger unemployment report. Where else do we stand? Crude. We actually pulled back. I talked about this on Tradier also yesterday. Pulling back here, my first target area is still the flat 200 on this breakout play. We broke above it yesterday. Told you I was looking at around 66.60, broke above it, and now retested this morning. So my still first target is not just because it's flat 200, it's because it's an emotional candle close. 68.50 is the next target, unless we really break back down and go into consolidation. Then I'd actually potentially watch for it to go the other way. But right now we're still holding up. We already tested the breakout level. Now we do have a little mini double top here which then would then I'd be watching it to go back into consolidation. But that is not triggered yet. That's the only negative right now on that breakout. Gold pulling back yesterday. We had the percent beat buy, the trend line buy, pulling back. I want to see how this reacts into the open, but because we still have daily cycles at the bottom. Silver spiking up back above the 87.5. We still do have this on a bigger time frame. That is still a mini potential double top against the rotation zone and may never trigger, but just going to keep an eye on that. What else? Dollar index. Dollar index is interesting because we could be putting in a short-term bottoming bar on a weekly basis. So I'll be paying next week attention to this week's high in the dollar because of the percent B potential buy setup and a potential then bigger return to the rotation zone. So what else? Looks like GIS could be. What I would be doing on GIS, again, I'm looking for the potential pullback here, and because if this triggers, I'm still looking for a potential pullback for a long position. A potential pullback on the daily. This has had, there's a big rotation into it. Now I'm watching for the pullback play, and then it would be a long for me. We have to see if it does trigger the weekly percent B buy. Would I be entering it on the close of the week? No. I will wait for a pullback. So that's where that looks. I've been underwater on a SoFi investment for years, and it's almost back to break even. Curious on your thoughts on continuing a multi-year position. I don't know what you mean a multi-year position. I mean, it's been years, so you've been holding it back since here. Because what would be the position now on SoFi? I mean, if you're just going to hold it to break even, that's why I use stops. I hate holding stuff for multiple years. If it breaks down, I don't want it unless it's paying a dividend, unless it's paying a good dividend. I mean, you can still, it's still a risky trade. It's still a risky trade up here, but if you're looking, I mean, it's back above the 62.5. So you got 1955 and then possibly 2210. I'd just be careful in here in the short term. If you're trading this in the short term, and you said you're for multi-year, which is fine, but for the short term people, if you're looking to rush in here, I would not be rushing in with very overbought with cycles at the top on a weekly basis. So again, this is another thing. If you love SoFi and want to get long SoFi, I'd be watching for a pullback play in that. If you're already in it, depending on your time frame, in short term, I'd be managing short term stops. In the long term, you just don't want it to really break down below 1450 again. VZ is getting into, I don't know, VZ. There we go. Weekly bull pennant. Why are my other... I mean, Verizon would be an interesting potential breakout play, but it would have to get above 44, really start getting above 44 and base above there for me to get interested in that. I don't even like that as a pennant. I mean, technically, yeah, but it's got a ton of overhead resistance. There's a significant level right here. There is a key significant level right there. Right around 44.25. You can see pausing with the emotional candle right there, bouncing off that level, breaking down through it, trying to break above it, could not sustain it, reconfirming that level right there, breaking above it, but the next bar back below it. Every time it's breaking above that level, you're getting rejection. So it has to base and break above 44.27 for me to be interested in Verizon. Good morning, Heinrich. All right. What else do we have? Let's check in. We got spiders. The spiders, again, the next key target, we're trading 622.07, 622.64, and then 623.97 are continuing targets higher on the Qs. The major key support now is coming in. I'm still paying attention to the 1 hour rotation zone on the spiders. So my support, if we did pull back in the open, is about 619.50, 619.40, 619.50. On the Qs, the Q's definitely lagging a bit, but there was a gap there was a gap fill that's going to gap above there, and the next key target we're going to gap above five. We're going to gap around 552.69. We have 553.58 is the next target up there. Other than that, your now key support is back at about 551.60. Bitcoin start breaking finally above the channel. But again, cycles at the top, nothing, there's not a great setup. So I'm looking for another pullback in Bitcoin going into next week. Tesla, disappointing delivery numbers, but rallying on that. So being patient, looking for another short rollover setup. NVIDIA, strong rotation up after the rotation zone yesterday, putting it in potential. This would be a great place to possibly trail a short-term stop because it is in mini potential double top territory. So it would be great below 151.50 on a closing basis. That would be where I would be looking for a short-term stop on that. So that's where we stand with everything. I don't think there's much more for me to cover. So we'll call it early day. Remember, don't get caught in anything this afternoon, and nothing is open tomorrow. So we have to wait till Sunday night. Well, I don't see the only thing at this point. It's looking more stagflationary with, again, inflation stuck well above the 2% target. So this is a real interesting because if we do get that recession, then it depends. If it's a mild one, then things could stay stagflationary. If it starts getting deeper, that's the only thing that could really start bringing down inflation. And the problem is, yeah, you can make the argument that tariffs can be a one-time inflationary thing, and we still are. They had a deal, I guess, worked out with Vietnam. But if you keep getting these little hits, and it's hurt the consumers, really starting to hurt, at least at the low to medium end. So it's definitely stagflationary for them. Okay, what's your question, BBAI? BBAI still in the rotation zone? Well, it's now extended from the rotation zone. So on any pullback, now BBAI closed back above the 62.5. So based off the probabilities, this could easily retest these higher areas, with the next target being back to 836 and possibly 936. But this could do another vertical up, vertical down. It's getting very overbought. Again, and you have cycles at the top. So would I be chasing it higher? No. I'd be watching for a pullback at least now. And you have a pretty key level right around 620, 628. You have the rising rotation zone. So on any pullback, that'd be the first area I'd be watching would be what are the lows there? Right around 626 would be key on any pullback. If it starts closing below that, then I'd be watching for the pullback deeper into the rotation zone. All right, with that, I shall talk to everyone again next Monday. Hope everyone has, at least in the US of A, a wonderful long weekend. Stay safe. And if you're overseas, thank you for tuning in. And remember, markets will be slower tomorrow because the U.S. is closed in terms of markets. So have a wonderful weekend. I'll see you all next week. Bye for now.